Hi there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm here to bring you some trading levels and some popular company symbols for the upcoming week of August 26th, 2024. What I'm going to do is I'm going to start out with this chart of Tesla that I was looking at last week and show you what I was looking for at the time, and then show you what transpired after that. And that'll kind of lay you the foundation for how we find trades at Precision Trading Labs, and also then to show you some other trading levels, and you'll understand where they come from. So this is where I was looking at last Friday. We're looking at a daily chart of Tesla here. And so if we notice the area that I highlighted in yellow here, price came up here at the end of July, the very beginning of August, and then notice that it consolidated up there. And then notice after that, it kind of slammed down from there. So what was going on in this region here? When price came up and consolidated here, we can think of that as buyers and sellers are in agreement at that point in terms of this relatively narrow price range. Okay, and so if we think of the shares that are acquired by buyers, we can think of that as the demand for shares. And if we think of the shares that are offered up by sellers, we could think of that as the supply of shares. And so within this yellow region here, supply and demand are in balance. Or to use a 50-cent word, it's an equilibrium. Okay. And then right here, that equilibrium is broken. We have a sudden exhaustion of buyers. No one's willing to buy here anymore. And so what's left in its wake, where supply and demand were there, okay, once you remove the demand from the equation, all that's left is all that's left is supply. Consequently, we now think of this level, once price drops out of this suddenly like that, we think of this as a supply zone. And a supply zone is the foundation for placing a bearish trade. Okay, and so what we can do is when price returns to this region, we could express a bearish trade. So what do we mean by expressing a bearish trade? Well, the most obvious thing, of course, is one could short Tesla. But another obvious way one could express a bearish trade at this zone would be to buy a put. Okay, and then also, if another simple thing one could do is, if somebody likes the strategy of collecting premium, one could also do a bear call vertical credit spread and collect premium. But those are all ways of expressing a trade based on this supply zone. Okay, so when price comes up to this region, that's the foundation for that trade. Okay, so if we now go to the live chart here, I'll show you what transpired out of this. So here's what we were just looking at right there. And so a couple of days after that, in fact, this earlier this week on Tuesday, I believe, price came up, drilled just a bit into that level, and then started to drop out of that. Okay, and so that was the predicate for the trade that a number of our subscribers had. And so lots of people bought puts, and a couple of people, couple of our subscribers who like to collect premium, they did the vertical credit spread that I just mentioned. But all of those trades were based on this particular zone. And the way the trade was structured was, this was the entry point at 227.90. So if you were shorting it, that's where you shorted it from. If you were going to buy the call, that, excuse me, buy the put, that's where that was your trigger point for actually getting into the options position. So that was the entry point. And then this is the point where our stop is. We place our stop just a bit above this zone. Okay, and so this is this defines our stop out point. And then once we have these two, this span here from the entry to the stop out, that of course then defines our trade risk, or at least our trade risk if one is actually using the stock. Okay, and so at that point then, each rung of this ladder that drops down from here represents one unit of risk. So that would be a 1-to-1 trade if it got to 220.70. That would be a 2-to-1 trade if it got to 213 and change there. And that would be a 3-to-1 trade if it got down to 206 there. Each one of those you can see is the same depth of that zone, of that risk rectangle there. And each one of these just represents a multiple of that. So that's 1-to-1, 2-to-1, 3-to-1. Okay. So that's kind of how we find our trades. And so what we do is we identify these zones. They then have to meet certain qualifications in terms of the structure of the zone, the length of time it's in the zone, how price leaves the zone, how far price goes once it leaves the zone, what some of the surrounding candles are. So there are some, there is obviously some qualifying evaluation criteria, but that's essentially the foundation of our trades. Okay, so right here, this is a zone that is a demand zone, and it's the inverse of the story that I just told you over here. This represents an exhaustion of sellers here. Notice price consolidated here and then pop from there. Having said that, this is not as good a quality as of a demand zone as this was as a supply zone. This has some defects. And so this is really not an A plus or an A or A plus setup. So I just kind of showed this to you really just to kind of give you an indication of what a demand zone would look like. But in fact, this is actually not as good a setup as this one. So we'll keep an eye on this level. But in fact, this may not, in fact, transpire into a trade. But anyway, that's the story with Tesla. So now I'll move on to a couple of other some other symbols here. Before I go any further, of course, the usual disclaimer: Precision Trading Labs. We are neither money managers nor financial advisors. Nothing that I'm presenting here is to be construed as investment advice, and everything here is for education and informational purposes only. So, at any rate, there you go. So that's the story with Tesla. If we move on to Microsoft. So here is what we're looking at here. Again, we're looking at the daily chart here. Over here, we're looking at a demand zone here. Again, we had price drop there. Notice price consolidates next to in a tight range here with all of these indecisive candles. And notice there's a gap and then a series of bullish candles. Notice each one of these close at the top, pretty much the top of their range. Okay, so this is where we'd be looking for a pullback into this level in order to express a bullish trade. Okay, and of course, one would express a bullish trade by exactly the opposite of what I said before. So one could, of course, buy the stock, buy a call, or in terms of collecting credit, one could execute a bear put vertical credit spread. Okay, so excuse me, a bull put vertical credit spread. So if price pulls back to this region, this is where we would get into a trade. Okay. And up here, and if we switch to a 2-hour chart, and in fact, you could actually see this right here. There's a rally, a base, and a drop out of here. Notice this actually looks like a very similar formation to what we just saw in the Tesla chart there, where you had that kind of slam down there. So this represents a quality supply zone here to express a bearish trade. Okay, so in terms of the distance from where we closed on Friday, this is about a little less than 7% above where the close is. So, obviously this thing needs to move about 7% in order to get up to that trading level. And so essentially what we do is we wait for the trade to come to us. Okay, and then below here, here's the demand zone that I just showed you. That's about 2.5% down. Because this didn't go a tremendous distance, I would actually think about modifying this level a little and probably waiting for it to get to the bottom to drill into this zone a bit further if it comes back here. And then that would become a better trade for us. So rather than getting it at the front line here, I might be inclined to kind of to do something along these lines here and wait for it to kind of get to this area of consolidation here. At that point, then the risk reward proposition on this trade becomes a little better than getting it at the front line. So what we always teach our subscribers is to get into the trade on our terms, not what the market kind of tells us. So we listen to the charts, we wait for it to come to our level, but then it has to kind of also work out in terms of risk and reward. And so this would be a poor risk and reward getting in at this front line here. So what we would do is wait for it to drill into the zone a bit and then take the trade. And if it doesn't come back, then you're either looking at a trade that is going to have sort of poor risk reward, or you kind of do it on a hit and run basis and not necessarily looking to get 2 to 3 to 1 on the chart, because essentially it doesn't come out of that with a great deal of energy. So that's the story with Microsoft. So we got this level above here, and then we got this level over here. All right. So that's the story with that. Taking a look at Apple. Okay, so right here again, and in a lot, if you notice on these charts, we have a lot of the same kind of sort of at the same location And this is roughly around July 15th, July 16th. That's where we actually hit an all-time high, and then price kind of slammed down from there. And that's actually the point where, if you were watching CNBC or Bloomberg, they talked, the kind of a lot of press came out of this where the headline was, "We're in a correction," because essentially the Nasdaq had dropped over 10% from this high here, and it was down about 13%, I think, at its lowest point. So we were in a correction. So that obviously got some major press in the business community there. So at any rate, we've obviously clawed back a good chunk of that, and we're starting to kind of home in on the all-time high there again. So at any rate, above here, though, if in fact we get up there, this is actually a quality supply zone here. So in fact, this is where we're kind of laying out the parameters of a trade, and so this is where we would express a bearish trade. And again, right here, here's a little summary that I kind of led off with at the beginning when I was talking about Tesla. So right here we have our supply zone, we have our exhaustion of buyers there, and so right up here, this is where we would be looking to express a bearish trade. So that's about 4% above where we are now. Down below here, um, and I would actually kind of be looking in here also. Right here, this is an area of actually where a number of our subscribers actually had a good trade about a couple of weeks or so ago, where we had this demand zone there. Notice price rockets out of there, and then when price came back, notice again that we got that same exact reaction. And so this is what I think of as a lightly tested demand zone. This is not a fresh demand zone anymore. In fact, this is, so in other words, the thing that we generally give us the best, highest probability are what we think of as fresh demand zones. This is now a tested demand zone. Okay, so it's no longer fresh, which means that some of the demand may have been has been chewed up by this incursion here, but in fact, it's most likely there's still untapped buying pressure that's waiting to be waiting to be tapped here. So we'll wait to see if this comes back here. The other thing I would also take a look at on this chart, just to see what it looks like in a slightly lower time frame in the 2-hour chart. But I have to say, nothing really impresses me here. This is kind of this grind up here, but there's really no clean. There's really no clean demand here. So in fact, I would be inclined just to kind of wait for price to return to this level and wait for the trade to come to us on our terms. So that's the story with Apple. Turning to NVIDIA, also I want to note that NVIDIA is one of the laggards in terms of announcing earnings. It's always kind of in the suburbs of the of earnings season. So essentially, earnings season is really over now, but we have those kind of laggards. Target just announced, I think, a couple of days ago, and NVIDIA will actually be announcing next week on the 28th, which is, I believe, what, Tuesday or Wednesday, I think. So shortly, NVIDIA is going to be announcing. So I really wouldn't be jumping into a positional trade on this. We would more or less kind of wait for the earnings announcement to come out, and then get out of the way of the earnings announcement, and then we'll see where price gets driven, and then at that point, then we would be looking to get into a trade. Nvidia actually, I believe, is a pretty volatile symbol. I believe it tends to move probably on average like 10% or something like that in terms of earnings. So just looking where these zones are. If it happened to, let's say, close right here before the earnings announcement, you can see price could get driven certainly to one of these, and it kind of course, it could get, the level could get overrun as well, because it is a little closer to that 10% level. So again, we just kind of want to wait to see what happens, and then we'll see about getting into a trade after the earnings announcement passes. So just in terms of looking at the chart, I just changed this to a 2-hour. So you can see right there, price rallied up there. Notice that consolidation. Notice that sudden exhaustion of sellers here, and then notice that rapid march up from there. So this is a quality demand zone in the 2-hour chart, or a 1-hour chart here. So this is where we can conceivably express a bullish trade if in fact the earnings announcement is disappointing and it gets pushed down from there. And then similarly above, we have a demand zone that's right there. and it's more or less kind of a pivot there. Price has not been back there. That's essentially a fresh demand zone. Excuse me, a fresh supply zone there. And so this is where essentially price kind of pivots there. After that consolidation, it probably looks a little better in the 1 hour. Whoops, in the 1 hour chart. And then this is where we would express a bearish trade right out of here. Notice price comes up. Notice then there's a little consolidation there, and then notice price slams down from there. So this is where we'd be looking to express a bearish trade. Turning to Meta, and let me go back to the daily chart here. Okay, so here's an example of a supply zone, but this is a supply zone that's only done half of its job. Price came up. Notice now it's just consolidated there. Price was stopped by this supply zone, but it really hasn't been pushed down here. This would have obviously been a nice place to sell premium because, in fact, if you're selling a bear call vertical credit spread, then you're looking to capitalize on time decay. And so all this time here for about the last, what is that, about 8 or 9 trading days, price is just wasting time there. And so of course one is capitalizing on theta, on time decay. So this would have obviously been a nice level for that. So we're going to essentially wait to see, what happens here, whether it's going to drive through and create another all-time high if the market holds together, or if it gets pushed down. In the 2 hour chart, this is kind of a quality demand zone right here, and that's about 9% below here. And then the other area of interest that we would also look at would be this area right there. Notice price comes up, that green candle engulfs this very indecisive candle there. And so if we took a quick look at this in the 2 hour, here's what we're looking at. And then notice price drops there. And so essentially what we have is this little level right here. And so this would be a little area of demand. The one below is certainly of greater quality just because price kind of runs a greater distance and comes out with a little greater energy. But this is actually a pretty reasonable setup right here. So in fact, this is another level that we'll be keeping an eye on of next week. So in terms of distance, that's obviously a lot closer. And so that's only about 2% down from where we closed. So that's another area of interest that we have for trading Meta. We'll take a quick look at Netflix here. Okay, so right here, here's a 2 hour demand zone. Then notice price rallies. Okay, notice then the price gaps, closes at its high, and then essentially we have this nice run up from there. And so represents again that exhaustion of sellers that I talked about earlier. So when price comes back here, this is what our trade would look like if we get a pullback to this region here. Okay, so that's the real quality zone here. And then the other zone that I actually do also kind of that I'm also going to be keeping an eye on is this region right here. And so if we get a pullback to here, this would be another area where we could express a closer area where we could express a bullish trade. Okay, so in terms of our distance from where we are from current price, we would basically have to go from 686 to 685. That's about $20. So that's really kind of about what is that, about a 3 or 4% move down from there. So that's actually a reasonable setup right there. Okay, so that's Netflix. There's really nothing on the short side that I really would like to trade here because of the fact that this is all chewed up supply right here. Okay, notice that we have this region here, and there's just been a whole lot of choppy trading up here, and then prices returned here again. There's really no clean supply here. Whatever supply was in here was probably just chewed up from these multiple incursions into this region. So there's really nothing that excites me about actually shorting up here. And then the last thing, we'll wrap up by taking a look at Amazon. Okay, so right here, This was actually a good example of a prior trade here. I think we were looking at this in the daily chart here. Up, let me just fix that. My data got whacked out here. Forgive me. There we go. So right here, this was an area, price came down, dropped, rallied out of there. Notice the consolidation there. Okay, this is where supply and demand were in balance. Okay, and then we got that pullback there, and then we got that trade out of that. Okay, so now we're waiting for price to return here, and again, um, this is an area that we're looking at. We're a little less impressed with this because there's really minimal follow through here. Particularly, we had this red revert. We had that reversal there, that pause before we had that gap and go there. So I'm going to keep an eye on this. This is actually not the greatest level, but it's certainly one that I'll be taking a look at. And again, with this might actually look a little better in the 2 hour. So when we might be able to reduce the size of the risk in there, and then it might become a better trade. But for the moment, this is actually the area above here that we kind of like for a short. Okay, so that we would obviously need we'd need a rally up to there. So again, we would have to wait a bit for that to happen, which is actually why when we chart our symbols, we generally have a bullpen full of setups so that as we have to wait for price to get to the levels that we want so we can trade on our terms, by having a number of setups, that enables us to get a reasonable number of trades as they transpire. This way, because if you're only trading 3 or 4 symbols and you have to wait a long time, people tend to get impatient. So what you do is you have a number of quality setups, and then they tend to trigger over the course of time, and then you get a reasonable number of setups. So at any rate, that's what I got. This is Mitch Firestone with Precision Trading Labs. Thank you for the privilege of your time, and I will see you next time. Take care. Bye bye.